All right, we are just seconds away from retail sales and import price data. The futures this morning have been weak for most of the session, giving back a little bit of yesterday's gains. Now down, they've improved, not 100 anymore, not triple digits anyway. On the Dow, Rick Santelli is standing by at the CME in Chicago. He is ready to parse these numbers for us from beginning to end. Good morning, Rick.
Yes, from beginning to end. Once again, viewers, listeners, there's a lot of numbers. I'll go slow. Retail sales, by the way, has had 4 consecutive positive months in a row. Will it be 5? The answer is no. January retail sales comes in on the light side. Disappointment. We're expecting down just a smidge. Minus 0.9, minus 0.9. That would be the biggest negative month-over-month change, going all the way below. It equals January of 24. You have to go to March of 23 to find a bigger negative month-over-month number. Now, these are advanced, which means in a couple weeks they may change. If you strip out autos, it improves marginally. It's still down 0.4. You strip out autos and gas, it's down 0.5. That would be the weakest level really since January of last year. And finally, the core retail sales, or the control number, comes in down 0.8. That's real disappointment. We were expecting that to be positive. Now, there are revisions, and minus 0.8, just to put a face on it, that would be the weakest core retail sales since March of 23. Now, we have revisions on everything across the board I just gave you, and all the revisions are positive, so it'll take some of the sting away. Headline went from 0.4 to 0.7 positive, ex-autos from 0.4 to 0.7, ex-autos and gas from 0.3 to 0.5, and you saw the control number improve from 0.7 to 0.8. But we want to really watch these numbers and see if they change at all in the coming weeks when we get our final reads. Import-export prices, these are also for January. If you look at import prices on a month-over-month basis, up 0.3. If you strip out petroleum, it's up 0.1. If you look at import prices year over year, up 1.9%. And just to put a face on that as well, our last look was up 2.2%, so it is moderating to some extent. If you look at export prices month over month, this is a biggie. We're expecting 0.3. It is multiples of that, 4 times that, 1.3%. That would be the biggest export price increase going all the way back to, and this is going to be a ways on this one, 1.3 would take me to, dun-dun-dun, we're looking at May of 22. May of 22. So that is way back. Export prices being on the high side, consider where the dollar index was a good portion of 24, and it has slipped a bit, obviously. And finally, the last category, export prices year over year. Well, expected 1.4. Once again, export prices zooming here, up 2.7. That would be the biggest export increase going back to all the way the end of 22, the end of 22. So much of that jibes with some of the inflation data we've seen. A couple things to throw out there, Joe. Some of the retail sales may have been affected by things like weather and other issues, exogenous issues. The dollar index, by the way, is now 106 handle, meaning it's under 107. If my memory serves me right, we haven't closed under 107 in the dollar index since mid-December. So this could be a new low close for the dollar index for all of 2025 and, of course, a little bit beyond that. The other issue we want to point to is interest rates really fighting at some very key levels we may spend some time on. We're now down at 4.49, so we're below 4.5%. 4.49 would be down 4 on the day. It is now down a couple on the week, which is significant to monitor. The weekly numbers are quite important. And if you look at a 2-year note at 4.26, right now that would be down 3 basis points on the week. Any close under 4.5 in a 10, any close under 4 3/4 on a 30, I still say is probably going to be an event that's more rare as we move through the year. Back to you.